Hi, thanks so much for joining in. You're watching the Mutual Fund Show on NDTV Profit, and my name is Alex Matthew. This show gets you actionable insight on everything mutual fund related. And the conversation that we have today is hopefully going to be an insightful one for you. Now, this last year, or in fact, since the COVID-19 pandemic, you've seen a huge influx of investors into the mutual fund space. And it's quite possible that you started investing in mutual funds over the last couple of years. There's another aspect that has been very critical to watch, and that is the introduction of new fund houses into the mutual fund space. In fact, over the last year itself, you had several fund houses with prominent faces in the financial markets launch their products. And today, what I wanted to do was to discuss whether these fund houses have found traction, which schemes have they chosen to focus on, and what style have they used, their fund managers, how have they performed. All of that is what we're going to discuss today, and we're going to give you a bit of a flavor as to what you should bear in mind if you are choosing to invest with any of them. Joining me today is Anant Ladda, who is the founder of Invest Aaj for Kal, as well as Mohit Gang, who's the co-founder and chief executive officer of Moneyfront. Thank you so much to the both of you. Always a pleasure having you on the program. And just want to get your initial views before we drill down into some of these names. What are the feelings that you have, or what are the thoughts that you have when you think of the kind of influx that you've seen of new businesses in the mutual fund industry? Mohit, I'll start with you and then I'll go to Anant.
Yeah. Thank you, Alex. Always a pleasure to be on your show. So look, honestly, I think it's just the impact of the overall industry, the way it's swelling, right? We are sitting at almost 62 lakh crore of AUM. And the way the AUM has grown over last 6-7 months, honestly, at the start of this year, we were around 50 odd lakh crores, and now we are upwards of 62 odd lakh crores. So the kind of groundswell which we are seeing is also cascading into number of players and participants increasing into the industry, whether it's the manufacturing side or it's the investing side. From both sides, we are seeing extremely high level of interest and increased participation. So on the manufacturing side, we have seen plenty of new faces, new AMCs coming up. We have also seen a plethora of new PMS providers and new other players entering the market. On the AMC side, right? So we have seen Grow AMC coming in. We have seen Navi AMC coming in. We have seen Zerodha launching their own AMC. We have seen NJ launching their AMC. We have seen Oldbridge, Helios Capital, right? So Trust Capital and a few others have relaunched their AMCs like Shriram. So multiple new players, multiple new entries, and I think it's just because of the increased participation, the increased AUM, everyone is wanting to dip into this industry, which is seeing groundswell for multiple reasons, right? There is obviously the bigger reason of financialization of savings, which is happening across the Indian households, which continues to remain the biggest tailwind to all the industries which we are participating in. But the other sense also is that industries are finding this very lucrative. I think asset management per se is an industry which has a long way to go in India, and that's where the majority of interest is coming in.
It's an interesting perspective. Anant, quick thoughts here. Of course, when you compare it with certain other markets globally, then this is not a very large number at all. The kind of the number of mutual fund houses that we have, and there's a lot that can still be done. So what do you make of the kind of new entrants that you've seen? Old hands in the industry have decided to start up.
Hi, Alex. Firstly, thank you so much for having me on the show. Always love having an interaction with you. See, if we compare it with US market, as you rightly pointed out, there we have more than 7,000 fund houses. In India, we have below 50 right now. So it is still the tip of the iceberg. And in coming few years, we'll be seeing a lot of more fund houses making their way in the Indian market. I feel it is good for the industry as a whole, because competition from new player is always tough. New player has something to prove. They try to beat the benchmark. They try to give something special. They try to add some flavor to their product. So overall, in whichever industry we talk about, if there is healthy competition, it is always good for the end customers. Here, end customers are retail investors. So eventually, I feel the larger the number of fund houses, the larger the options mutual fund investors have, better it is for them. Plus, I still feel that India deserve at least 70, 80 fund houses. We are still short of 30, 40 more fund houses, which might find their way in next few years. So I'm quite positive with the entry of new fund houses. And as you are rightly showing on the screen as well, each fund house is coming up with a new theme, with a new mindset, which is good for an investor.
Let's talk about a few of them. Mohit, you've already named a few of them, but then some that stood out to me: Oldbridge Capital, Kenneth Andrade, you have Helios, Samir Arora, you have Trust MF, Utpal Sheth, and of course, you've had the team that has been put together. Zerodha also stood out to me. Let's talk about what you think about each of them. I want to start with Helios, and it's got, as you pointed out, 4 schemes. What have they focused on? What has the response been? And how have their schemes performed?
Okay, so look, I think Helios comes from a very vintage fund manager. Honestly, Samir Arora is not an unknown name in the Indian mutual fund industry. He has had previous stints in his earlier avatar in the Indian mutual fund industry for a fairly, fairly long time. In fact, when I met with him before the launch of his first fund, right, and that time he said, "I'm the oldest fund manager in Indian mutual fund industry, and no one has the vintage which I has." And in a manner, he's right, because he started much before this current crop of fund managers came into being, right? So he's had a very, very long stint. Obviously, in the interim, he went off the Indian shores. He was in Singapore. He was running a PMS and an AIF or a private portfolio management strategy from there. But he always wanted to prove a point, and that's the reason why he's come back to the Indian shores and he started a mutual fund of his own. The 2 schemes which they have, the Flexi Cap and the BAF, honestly, the performance. Look, Alex, I think the first points first out, it's too early, too soon to judge any of these fund houses by their performance right now. Honestly, 3 months, 6 months, or even a 1 year time frame is not good enough. We at least need a 3 to 5 year time frame for us to be giving a very affirmative view on these fund houses, saying as to what their strategies, have they stuck around to their strategy or their words, or so on and so forth, right? So in a short period, we can see that they followed a growth kind of a strategy. The first fund which they launched has done quite well. Honestly, it's beaten the benchmark for the 3 month, 6 month time frame if we check around that. So far so good. Honestly, I think markets has also been one-sided in this while. They've been lucky that they've got the support of the markets in all this while. But the credit has to be given where it's due. They've beaten the benchmark so far. So my initial sense is they've done a good job. They followed a growth strategy. They've stuck around to their philosophy. They've not taken too many names in the portfolio. When we met with Samir Arora, his strategy was very clear that I have to just weed out few names from the overall universe, which to my mind are extremely useless, right? And the other names, I will first start with almost identical allocation, and then we will play around with allocations as we find more conviction around those stocks. So I think he's kind of following that strategy, and the results are there to be seen in the short while.
Anant, you want to quickly weigh in? Helios Flexi Cap Fund, 3 months return over 11%, over close to 19% over the 6 month period. What Mohit was pointing out, it's the perfect scheme to have good stock selection in.
So let me try and figure out the way Helios Fund House is thinking right now. If you look at their FlexiCap fund, which is managing around 1700 crores of funds, you will see that 37% of their exposure is in finance. So they are kind of overweighted in finance. Recently, they have even launched their financial services fund. So we can figure out that this fund house is presently bullish on financial services. Of lately, we have seen that this particular segment in the market has underperformed, and probably they are trying to capture in that value proposition along with their growth strategy, which is inbuilt in their basic mindset. So this is the basic mindset which we can see from this fund house. Presently, majority of their capital, majority of their investment, which they are managing, is in FlexiCap fund. And it is investing 66% in the large caps and focusing a lot on financial services. So yes, this is their basic mindset. They are doing well to start off, but I feel we still need to give some more time to judge whether they'll be able to perform well in the coming days or not. I think it's too early to decide that whether it's a perfect fund for an investor or not.
Yeah, no, that's a fair point. Both of you have made that point. And look, I'm not asking either of you to write off or to say that this is the best possible fund manager. It's just to give viewers a sense of what they've done so far and also what their philosophy has been. Let's talk about Trust MF, because these guys have a pretty large suite of products that they've launched already, 8 products, and they've also got a Flexi Cap fund, which I think has a bulk of their funds, and they've got a few debt fund options as well. I'll come to you first this time, Anant, on this one. What do you make of Trust MF's launches, and what has their strategy been like?
So if I closely look at Trust's Flexi Cap fund, they have around 60 stocks in this mutual fund. They are almost trying to reduce the sector risk and almost replicating the benchmark. And they have fairly diversified portfolio of 60 stocks. They have performed in line with the benchmark, but I won't say that they have outperformed the benchmark. It is a decent, safer kind of fund for a new investor to start his investment with, because it's a flexi cap fund with more than 70% of their allocation in giant or large cap stocks. So comparatively, it will see less of volatility and a safer option for a fund house to start off.
Okay. Comments, Mohit, about the style of investing. Anant has labeled it as a slightly safer, more conservative style of management. How do you read it?
Look, Alex, so I think Trust has always been known as a debt house in the country. They were merchant bankers on the debt side, on the DCM side, and that's their pedigree and that's their trademark in the market. Even today, if I were to, let's say, just form a view in my mind basis their past history and everything, I will call them a debt fund house. For them to prove metal on the equity side, I think it will take some amount of time. My sense is, as a debt house, I can still go ahead and trust them. Honestly, for me to find a convincing reason to be with them on the equity side will still take some while. On the other fund houses, I at least know that the fund managers have been on the equity side in the industry for a fairly long while, even though the fund house itself is new. But out here, I am still a little unsure on the equity side, so I will give it a little time. Honestly, as Anant rightly said, I think the strategy is also a little mixed as of now. So for me right now, there's no formative view on equity. On the debt side, I'm pretty okay with it.
Okay, let's talk about Oldbridge. Kenneth Andrade, old hand, and a lot of people like to listen to his interviews. He's spoken to us as well. Mohit, what do you make of his strategy? He's got one scheme that we're speaking about 590 odd crores that he's managing right now. What can you tell us about it?
Look, Alex, one thing which I like is they haven't been greedy enough in this kind of a market to launch one scheme after other. They've settled with their one scheme. Oldbridge as a PMS house, honestly, was a mixed breed of results. It wasn't that great. Kenneth, again, is a name which is not unknown in the industry. He has a long pedigree, long history. I recall Kenneth's golden days from IDFC Fund House, the erstwhile IDFC. Now it's called Bandhan, obviously. And the IDFC Sterling and the IDFC Value funds were like iconic at that point in time when Kenneth used to manage them. And that's from there he's got his entire vintage and experience in the industry. As of now, the fund has done well. Alex, it's again beaten the benchmark, so obviously no complaints so far. And Kenneth again is an equity guy out and out. He's been a good cherry picker of stocks when it comes to the small and mid cap segments also. Plus, he has had an experience to run a PMS strategy again. So my sense is he has a blended approach right now in the portfolio. If I see the portfolio, they're heavyweight on industrials. They're overweight on industrials, which is a very interesting call right now. The market is moving little away from all these segments though, but he continues to hold an overweight position out there. So only time will tell again as to what the results are. But from an equity perspective, Kenneth is a hold hand and we could be convinced putting money into that.
Yeah. Anant, what's your view on Oldbridge Capital, the focused equity fund?
I would say a fund house which has taken the most bold move, because majority of the fund house either start with a flexi cap fund or with an index fund, because that is comparatively a safer option to start a new fund house. But here they have started with focused equity fund, investing in just 20 to 23 stocks, taking a very heavy weighted sector calls. So this kind of fund is for usually an aggressive investor. Either this fund will outperform largely the market by a huge margin, or they'll underperform when we will be talking about this fund probably 2 to 3 years down the line. So this is a kind of aggressive call, and I am very happy to see that they have not launched another fund, because it would have been very easy to launch an index fund or maybe a flexi cap fund at this time and gather another 500 600 crores in that fund. But loving the clarity, will be interesting to watch out how they outperform. I know they have taken some stronger calls in their stock selections and sector calls. Fingers crossed, and looking forward to their actual performance.
And they've actually panned out. They've done pretty well. 6-month performance of 25%, beating the benchmark, which has gained about 17% in that time frame. 3 months has also been particularly good, 19% compared with a benchmark performance of 9.5%. But of course, both the gentlemen that are speaking to you right now have pointed out that this is a very short time frame, and so be careful about judging future performance based on past performance. There's one more that I wanted to talk about from my end, and it's actually going to be a pretty short conversation because they've got primarily, or rather only, passive options, and this is Zerodha Fund House. They came in with the intention of leveraging the kind of reach that they have, and it's not a lot of assets under management that they've managed to capture. It's not small, to say the least, but it's not tremendous. What did you make of their journey so far, and do you think that this is just the start of what could be a very rewarding journey for them? Mohit, I'll come to you first.
Yeah. Look, Alex, I think it's a long, patient game which they are playing, and I think they're masters at that. Honestly, I think as a brokerage house also, they took long while to get established, but now they are the kind of numero uno, enjoys the numero uno position in the country, right? So my sense is passives is the way for future. Today we can obviously argue either ways, whether it's something in making or it will take a long while in the Indian mindset or so on and so forth. But globally, passives is becoming big, and Zerodha has taken a conscious call of being a passive only AMC. And I think their launches will also be in the ETF formats because they have the broking wherewithal and they have the infra to support it. Plus, as you rightly pointed out, the distribution and the reach is phenomenal digitally, right? So it will take a while. Passives as an industry is a slow and steady kind of industry as of now. The kind of mop up which we are seeing on the AUM side is mostly happening on the non-passive side or on the active side per se. But my sense is this is game of future. So it's not a game to be played in 1 year, 3 year. It's something which will play out in perhaps 10 years from now.
Yeah, that's a fair point. Of course, you're going to have BlackRock also playing in a similar space when it does launch. And it'll be an interesting one to watch out for. Anant, any comments about Zerodha and the options that they've presented for investors?
See, I personally feel that the Zerodha guys are one of the smartest players in the market which we have. They are playing it slow, and I have not seen them marketing their funds a lot as of now. So probably they are mainly focusing on overnight funds because they know that right now a lot of their investors who are trading on their platform need this fund. And index fund to start off slow. I feel once they start marketing and once they start going all in this segment, they will gain large numbers and it will be multifold. So I'm just waiting for the time when they become active in this segment. Right now, I have not seen a lot of promotional mails or articles or maybe some promotion going on from Zerodha side. So I am still looking out for their promotion activities to start off.
Okay, fair point. You know, gentlemen, we've spoken about a few fund houses, but Mohit, at the start you mentioned some more as well. You know, because of the paucity of time, I've chosen a few, but are there any that have stood out to you purely on the basis of the kind of style that they're bringing that stands out? Any comments that you want to make?
Look, Alex, again, as I said, it's too difficult to judge an envelope by its cover, right? So it's too early in the game. But let's say Bajaj Finserv, they've been fairly aggressive on the distribution side. They're trying to reach every nook and corner of the industry. They're continuously launching new fund houses. So they are the ones definitely. Plus, they are a financial powerhouse. As an NBFC also, they are fairly big. They have massive distribution and scale. So I think as an AMC, I will keep an eye on them. On the passive side, I will definitely want to keep an eye on Grow. If not the single largest player today in the industry, they are at par with what Zerodha is in the industry. So my sense is Grow, Zerodha and Navi. These three are the new age passive AMCs completely focused on digital channels. They are the ones to be looking out for future. Right. So yeah, to my mind, these are the names.
Okay, Anant, anything to add to that?
I think Mohit perfectly covered it already. And I would just give an important disclaimer for all the investors. Whenever you are going with a new fund house, make sure that you have some bigger and stable names as well and have a good combination. That's it.
That's a fair point. All right. We do take viewer queries on this on a regular basis. We invite queries. That number that you see at the bottom of your screen, I forgot to tell you about that, but that's where you send your questions to us. And quite a few of you have already written in, so I've taken the liberty of sharing some of those questions with my experts today. I will come to you, Anant, on the first question, which is from Manish. And this is, so he says that he's 40 years old. He said that he recently started investing in the Quant Focus Fund with 10,000 per month investment and later realized that focus funds are relatively riskier. Should he continue with this fund? I guess what he is pointing out is what you spoke about as well with the focused equity fund of Oldbridge, where they have a smaller portfolio and therefore concentration. So what would you suggest that he do in this situation?
See, if he feels that he is overexposed in terms of risk, probably he should slowly move to multi-cap or a flexi cap category because they are comparatively safer options. An important disclaimer for Oldbridge as well, that presently they are heavily invested in small caps and mid caps, and small cap and mid cap have performed well in past few months. So that is why that fund is also outperforming. Same might happen with other funds as well in the focus category. So if you feel that it is becoming riskier for you, probably you should slowly shift out to either multi-cap or flexi-cap as a category.
Okay. This is actually a pretty interesting question, only because a lot of people will be wondering about it. Mohit Subramanian, who is 57 years old, is asking about the PSU and Infra Sector. And here I'm guessing he wants to know about sector or thematic funds. And I've been saying this on a daily basis. It is now the largest single category in the actively managed space. No prizes for guessing why. What would you do with regard to this? Would you advise getting into this, or would you say it's better to look at a diversified fund which anyway might have exposure to these sectors?
Look, Alex, to my mind, there could only be a couple of reasons for investing in sectoral or thematic options. One, you are closely linked to that industry, you know the wherewithals of it all, and perhaps you know something extra over and above what a normal investor might not know, and that's the reason why you would want to take advantage of that information which you have. And second is, if you're a financial advisor or in your own right, in your own judgment, you think that the cycle is actually playing out and you will be smart enough to time it extremely well to perfection, getting in a time and getting out at the right time, which is the more important part in all these cycles, right? If you belong to any of these two categories, then by all means and ways you should be invested into such themes and sectors. But I'm not of this camp, honestly. I think a diversified fund or a flexi cap choice or a multi cap choice would do better justice. The fund manager out there is completely empowered to take sectoral calls. He can go overweight into sectors which he deems are the ones to be looked out in future. And if he thinks PSU still has steam left, by all means, they will go overweight on PSU, right? After having seen the cycle for last 2-3 years where PSUs have played out so ferociously, and for last couple of months, we have seen that they've gone through some bit of correction also, right? So my sense is one should stay away from these sectors, especially at these kind of valuations, which are insane, if not unrealistic, right? My sense is staying away from sectoral in general, and PSU specifically would be the thing. If you at all want to do, then you have to belong to the first two categories which I mentioned.
Yeah, that's a fair point. The next question is from Santosh. He's 56 years old. He's asking, is it advisable to invest a lump sum of 10 lakh in a multi-asset fund for 5-year period? Should it be spread over 2 or 3 multi-asset funds, or should I just go for one fund? Incidentally, Santosh, hopefully you're listening. We had a conversation about multi-asset funds yesterday. We went into a lot of details, but having said that, if you want, you can catch that on YouTube. Anant, do you want to weigh on this? Only about 9 schemes to choose from, if I'm not mistaken. Would you choose just one, or would you put it in more?
See, I would surely like to choose 2 of the 2 funds to diversify the amount. Plus, I would like to diversify across the time period as well. For example, I would love if he could invest in a SIP format and maybe divide his total corpus in 15 parts and then divide it in 2 schemes. 2 will be more than sufficient.
Okay, okay. Which ones do you like? I'm not asking you to give a recommendation, Anant, but from the schemes that are available, which have you looked at very closely?
See, one fund which I find very interesting is White Oak's Asset Allocator Fund. So that can be a fund which you can look at. And even ICICI is fairly experienced in managing multi-asset funds. So these two are two funds which I would look at. One is a traditional and a long-standing fund house, and other one is comparatively a newer fund house. So you are getting a mix of both worlds.
Okay, fair point. All right. The next one is from Dinesh. He wants exposure to gold. Which should he choose between gold ETF, BAF and multi-asset fund? BAF is not something that invests in gold. It is primarily fixed income and equity. So the option really is gold ETF versus multi-asset fund. Mohit, what would you choose?
Look, if you really want allocation of commodities or gold per se in your portfolio, then you have to go for a pure play gold option. Whether you go through an ETF route or a gold fund, or better still, you go through an SGB route. The only problem is SGBs are not open currently, and none of us are sure as to when the next tranche is likely to open. This financial year, perhaps the overall allocation of SGBs might reduce a little. So one has to wait patiently for the new opportunity to come in. But the best way of investing in gold is through sovereign gold bonds, which is SGB. And the second best route, if you want pure play gold exposure, is then through gold ETFs or gold funds. And now the taxation has also changed. It's become extremely friendly, so it's not taxed any longer as a debt fund which is clubbed into your income. Now the taxation is 2 years long term, which is 12.5%, so which is fairly okay, right? So a gold ETF or a gold fund is a better choice to go. Multi-asset only if you want 10 to 15% gold allocation, then perhaps that's kind of an hybrid strategy, but I would go with a pure gold fund.
Okay, that's a fair point. Thank you so much, gentlemen. Mohit as well as Anand, thank you so much for taking the time for speaking to me and for answering all the questions that you did. Viewers, it's been an absolute pleasure. Hopefully that this conversation has been beneficial to you. If you've got questions, do remember to write to us on that number that you see on the screen. And in the meanwhile, stay tuned. There's lots coming up over the course of the day. This is NDTV Profit.